Alright, thank you for tuning in to another edition of the Vulcan Report. This is a follow-up video to our Pimperation of America series. The chart you're looking at right here is a chart of Bank of America. As you can see, we managed to see an increase in price activity today. After hitting that low of 1091, we then rallied up above $11, hitting $11.30 before closing at $11.29 today. As you can see, that this stock is still under tremendous pressure. Notice the timing of the video that I gave, and then the decline of the market thereafter. Okay, you can see what's happening here. We hit a peak up in here, and we fell down up in here. All right. Now, some news that you need to know regarding Bank of America. Today they decided that they were going to announce that they're laying off a quote-unquote small percentage of the technology workers, and that was reported in the Charlotte Observer. And a company spokesperson said that the layoffs in its global technology and operations unit will occur in the Charlotte area, but the bank did not disclose the number of workers that will be affected. In addition to that, we learned today that shares of Bank of America and Wells Fargo were higher following the Bloomberg report that says that the two banks were among the top borrowers from the term auction facility, one of the Federal Reserve's first efforts to fight the financial crisis. Bank of America had 3 loans for $15 billion each, and Wells Fargo had 3 loans for $15 billion each. Bank of America shares were up 1.83%, or up 20 cents to $11.14, and Wells shares were up 0.48% to $27.34. And that was around 2:36 p.m. Eastern Standard Time today. So as you can see, it is no surprise that the 2 largest banks in the country were among the chief recipients of the bailout dating back to 2008 and 2009. 3 installments of $15 billion each. Let that marinate for a minute. All right, $15 billion each. Okay. Now, if the 2 largest banks got $80 billion combined, what does that tell you about where the majority of the money went? The majority of the money went to the banks to bail out the banks. All right. Now, as you also know, as I warned you, that Bank of America is still in trouble. They're in trouble as a result of the mortgage crisis. They're in trouble as a result of making bad loans, bad investment choices and decisions, and having something of the neighborhood of $200 trillion in these derivatives, these things that are not even really on the books, and is almost impossible to be able to audit and find how deep the rabbit hole trail goes. So just for the record, we know that they have at least, we'll lowball it and say they have about $1 trillion in this deep black hole abyss that we call derivatives. All right, so that's what's up. They're in trouble. So this little move today means absolutely nothing. Okay, people are still selling short the stock. They're still loading up on put options. The stock is toast. It will not be long now before the stock is probably delisted and goes the way of Fannie Mae and Freddie Mac. Everyone was in denial until those stocks dropped below $1. And there were even still some people in denial even then. But now we don't hear anything about them. because they're gone. Just like Bear Stearns and Lehman's is gone. People are in denial even with those entities until the very end. Some even suggested that they would bounce back. They're not coming back. Well, here you are here too. So this company will probably be absorbed into another company. By the time it's all said and done, we'll probably have maybe, what, 2 banks left if we're lucky. So we'll see. They give the money to whom they want so that those entities can start to swallow up other entities. So when it's all said and done, there can only be one Big Papa. I'm going to probably say that Wells Fargo will probably purchase Bank of America or something like that. So just to let you know, be on guard. Nothing has really changed. Yeah, we had a nice little rally on Wall Street. Notice how when they talk about bailouts, for some odd reason, the market gets happy. The euro managed to rally back off of its lows, and everyone is happy that they get to get in debt and get to be financially castrated by the Federal Reserve, because that's really what it boils down to. All right, you become a slave to the World Bank and the International Monetary Fund. It's just that simple, and you know, there's really no hope at this point. All is lost at this point. Another thing you want to note here too is the nice run up we had in silver. Those of you who are, how can I say this, precious metal bull people, bugs, whatever you want to call yourselves, you're liking this chart because we're bumping up against this $29 resistance level that we talked about, and this is going to be the test here. If we can close above 29 in the silver, the next stop will be around the $35 level. It's just going to take off like a rocket, and we should see some parabolic moves coming in here in the next few days here in the metals. Understand too that a lot of positions need to be unwinded this month. We still have the issue of JP Morgan being squeezed, the short squeeze of the century with JP Morgan. I do not believe they're going to be able to stand. Just like we talked about on the radio show last night, the PPT does not have the wherewithal to stop that train. The only thing they can do is halt trading in the precious metals or in the markets in general. That would be the only way they can stop it. Or they can pass some type of emergency legislation or law saying that banning the trading in metals or something ridiculous like that. But right now, as it stands, this is where we're headed. We're going to the moon here. Can't say the same about other entities, but let's just pull it up so you can take a look at it anyway. Here's your Dow. Nice parabolic bar here. Nice way to try to bounce off of this here. But still, look what has happened. We do have some technical damage now up in here. You see here how the green line is just crossed below the red line here. That's a bearish signal. That usually signifies a top, a short-term top. We will see. The market did manage to close above here, but we still need to do several more days like this in order to overcome where we are. We're still bullishly consolidated here, sideways, as you can see. All right, here's your top here. We tested that top here. Here's your base here. All right, so we're stuck in this range now. The top of the range being 11,289, and the bottom of the range being 10,929. All right, the Dow loves to establish these types of ranges. It likes to do that. All right, so here's where we are. All right, 11,280 on the top and 10,929 on the bottom. So the range is starting to narrow a little bit, and we're getting closer to getting inside of the cloud here. Once you get inside the cloud, anything goes, anything can happen, and normally it's very difficult to resume a course of action without breaking and testing the trend line support down here at 10,495. So I will say that even though we had a good day today, we're still in jeopardy of sinking inside of the bullish Kumo consolidation cloud. And if that happens, we could see a major 1,000-point drop coming here in the Dow. It looks like it's lagging the euro right now. The euro's already attempted to complete its test of support cycle. See how the green line crossed below the red line here, signifying a top. Okay, confirming this top. Well, look what happened. Look at the price destruction here. Doesn't matter what the fundamentals are. The markets aren't following fundamentals; they're following the technical patterns. We broke below the trend line support, which is now trend line resistance. And you notice what happened when we got inside of that cloud. Like I said, price destruction. Now, the bottom of the original bullish Kumo cloud is now the resistance. The old support is now the new resistance. And it's going to have to fight really hard to get back above here. And then even when it gets up into here, there's a lot of noise up in here. And then trying to break 137.55 for the euro is going to be next to nearly impossible. Even if we do hit up in here and bounce around, we still come back down to test this support. So while the euro is now trying to move up off of its support, the stock market is yet to follow. I do not believe that the correlations have broken down as of yet with the euro and the stock index futures. I believe that it is the tail wagging the dog at this point, and we're going to see that. You see, here's a top here. I believe that you're going to start hearing the failed double top being called here too. See, top. Now we fall down into the cloud. That's what it's looking like. It's good. You see the market in the NASDAQ here is trying to cross back above here. See, this green line is trying to cross back above this red line here. Okay, we need to see some more, like I said, follow through, break out of this consolidation, and get back above this 2198 and close above this, if we're going to have some legs here. So don't be married to just one position at this point. Yes, the overall pattern is still bullish. We're still above resistance, but we are experiencing some technical difficulties up here. We cannot ignore the price action. Cannot ignore what's happening in the price action. So in closing, one last thing I want to pull up for you here is taking a look at gold. Here's gold. Excuse me. Here's the top here. We're trying to test the top here. If we can't manage to get up in here and close above this and take it out, then you're going to hear the yells and screams of double top, sell, 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 and that's what's going to happen. So gold and silver is a very special place right now. We really need to get above here and continue here. We struggled today in the metals. We struggled. We did not take out the overnight highs like we did yesterday here on this bar. We managed to do it and continue to trend. Today we got kind of caught out there, and we're going to need to see some real follow through tonight. So let's see what happens. In closing, remember what I was telling you and what I've been warning you about. Keep cash on hand as much as possible, so that you won't get caught out there, and just be safe. And for those of you who had a wonderful week in the Black Ops Trading live chat, kudos to you. Stay encouraged, and let's not be greedy. Let's just take what the market gives us. Remember, take what you can and give nothing back. No over trading. Just wait for your signals and let the market do what it's going to do, and the pulse waves will pay you, as you've already seen this week. All right, peace out.